Hello students, I'm here again to take you lesson 1 part 2 of ACC 307, Fundamentals of Auditing and Assurance. I am Professor Rosemary O. Obasi. You will recall that in lesson 1 part 1, we looked into the origin of auditing and assurance. We looked at the meaning, some definitions of terms, and we also specified why we conduct an audit. In this part 2, we are going to be looking at the differences between auditing and assurance. We'll be looking at the brief introduction to assurance engagement and then the benefits of an audit. Yeah, I would like to differentiate audit and assurance from 5 different points of views. First, the definition. The definition of an audit is that it's an examination of financial records whereby an independent professional expert expresses an opinion as to whether the financial statements show a true and fair presentation and disclosure of the transactions recorded. Why for assurance service? This is an engagement that involves the assessment and ensuring that improvement is done on the quality of the information in a company's financial statement and also expressing a conclusion that will aid users' decision making. Another difference will come from their nature. Auditing includes making sure that ethical presentation and accurate disclosures, as well as checks whether financial reports are as per accounting standards and principles. While assurance is used to verify the accuracy of financial statements, it also assures all the interested parties that there is no misrepresentation done in financial records, no misuse of funds, no fraud, and no dishonest activities done in a company or done by the company. Another difference comes from the timing. Timing of auditing must be conducted first before an assurance can take place. So assurance comes after an audit has been done. Then staffing. Auditing can be done by internal staff of the internal audit department or an external auditor as required by the statutes. While assurance engagement are usually done by external firms. Then use. Audit reports are general purpose based. They are used by all stakeholders, while assurance reports are usually used by the third parties who have indicated interest for such an engagement. A brief introduction to assurance engagement. Assurance engagement, as defined by International Standard on Assurance Engagement 3000, is an engagement in which a practitioner aims to obtain sufficient appropriate evidence in order to express a conclusion designed to enhance the degree of confidence of the intended user other than the responsible party about a subject matter using a suitable criteria. And types of assurance engagement. We have basically 2 types. One is the historical financial information assurance engagement, which leads to a reasonable assurance. For example, like the statutory audit is an example of historical financial information assurance engagement. While we have other information assurance engagement, which are usually known as limited assurance. For example, you have the review of financial statement for prospectus or new listing of companies. Then there are 5 basic elements you must find in every assurance definition. One is the parties involved in the assurance. You have the practitioners, that's maybe the auditors, also known as the auditors, the responsible parties, those are the directors who prepare the report, and the intended users, which are usually in most cases the shareholders. Then you have the existence of the subject matter. You must have what they are working with. Could be the financial statements or report on corporate governance. Then you have the existence of suitable criteria, e.g., the benchmark, the regulatory framework that they are using could either be the IFRS or the Nigerian Corporate Governance Code. Then you have evidence. The essence of the whole thing is for them to gather and evaluate sufficient and appropriate evidence. And then there must be a report. This report is in the form of a conclusion with respect to the subject matter as related to the benchmark used. Yes, let's talk about the benefits of an audit. From all we've been saying from lesson 1 till date, you find out that the benefits of audit are so many, but let's make a list of some of them. First and foremost, it enhances confidence in the financial statement of any organization. It can lead to fraud prevention and detection. It reveals accounting and other weaknesses found in an organization's reports and system. Then it is used to facilitate loan. It's also used to determine asset valuation during business acquisition and mergers. Helps in settlement of disagreement, like that which exists between the owners and the directors based on doubts in the report presented by the directors. And then it makes accounts more acceptable. It is used to facilitate stock exchange listing. At this point, we end the first topic, fundamentals of auditing and assurance. I hope you find the class interesting. See you in the next class. Bye bye.